Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. We are recording on June 26th, Sunday afternoon. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. Barrie, how are you?
Hi, Ben. I'm doing pretty well.
I was in isolation for the last week on a beautiful island, so I had no idea what was happening, and I come back and see a lot happened.
Yes.
Yeah, so let's jump right in with Bitcoin and see what the most volatile asset in the world is telling us. It's telling us that we're still weak. You know, we're losing levels and then not recapturing them, and you can see that from the all-time high last November. Every time we lost a level, we haven't been able to recapture it. I mean, here it tried, lost it. Now, we had about a month or so of this, 6 weeks of this sideways
distribution. Now it looks like.
yeah, below the half square. Mm-hmm. Now the big question is going to be, what do we do? When we get up around this, 25,000 level, can we clear that?
If we get up there.
Yeah, if we get up there, can we clear it? Because if we clear it, then we can say, okay, maybe something a little different is happening. Mm-hmm. Unless it does this garbage again. The Bitcoin has been hyped and pumped and dumped and all the things that they do with these speculative assets. But if it is a major new, way of dealing with money, what if we just were doing a big ABC correction before the next move higher? Where does that take us? It takes us down to around 12,000. I think it's a reasonable target. And the reason I say it's a reasonable target, let's slide right here and look from whence we came. 12,000 would be right around here.
Right. Basically where we broke out.
Yep. And what do we always say in bubbles? They erase the speculative move. Ultimately, they erase the whole speculative move before before you figure out whether you actually have something that's a game changer or, it was just a bubble that popped. Mm-hmm. So having a target in here would not be unreasonable. It would be an ABC. It would correct the whole, bubble move up to, 66, 67,000. And it kind of looks like what we're doing.
Yep.
You got anything to add here on Bitcoin?
Ben, after you drop that ABCD, what's the, if you take that April high to the May low, to the June high, where do we get from that ABCD? I was trying to eyeball it. So it's right around 10 then. 10
about 10. Yeah, about 10.
Okay. So that's definitely a good zone. Good zone to drop a box in.
Yeah. The 10, 12 could be our, our quarter target zone here. And I'll draw a box in and we can do it. But let's jump into the big five. I've done a chart review, but I'm very curious to hear your thoughts on the week that was.
You see that okay?
Yeah, it looks good.
All right, great.
Oh boy, look at that support. What a nice hit.
Yeah, that was a good hit. And we called it out.
I mean, right away, my eyes go to 144 in price, 144 in time. Hello.
Well, so low is basically a has-been, right? We got that, and we were looking for a rally at least to test 38.50, and if we can get around that, go on up to 39.50. So we almost, we basically pulled it out. So we're good. Mm-hmm. And if you guys are new to this, first time you're seeing this, go back and check the last few episodes, because Ben and I both sort of thread the needle over time through the charts. So it'll make more sense to sort of catch on to the story. And if you guys watch the last couple, you can catch up on how we sort of got to this low and, how we came out of this high and sort of play by play. That said, if you guys like our work, please remember to, hit the like button and share with like-minded folk, and also to hit the, reminder?
The alerts.
And, it's funny, every time you mention it, we get a whole bunch of likes. So I just have to remember to mention it.
That's right.
All right, getting back to next week. So we already talked about this low. I don't want to spend a lot of time. We did that last week. So this week we want to know, how to manage the week coming into the expiration on Thursday. I would say the key level to watch would be this 38.50 for support. We would want the market to hold above 38.50 on any kind of a pullback. If we can manage that above 38.75, that's even better. That'll be a clue to how strong the market is. That'll be the difference between, getting down to 38.50, which is still fine. It's still very bullish. And if it's 38.75, it's, we can just say a little extra bullish. And that's just to watch those two levels on pullbacks. Now, if we pull back and we can't really get above 38.50, that's probably not a good sign. And we're probably going to consolidate through into the end of the month. So that's how I would call that. That said, to the upside, there's a lot of resistance around 4,000, looking at my work. And it really, there's a little bit of a range, like 4,000 to, let's just say, give or take 10 points around 4,000. But that's where the next major resistance is. But of course, on the way up there, we got this halfway point, and that would be 39.50. These numbers are really falling pretty well on the half square. Through the square, numbers are sort of whole numbers and good halves. So 39.50, 4,000, 38.50. These are all lining up, and those are the areas to watch. We might have to spend a day or two. Day or two at around 39.45, but as soon as we get above that, we got another 50 points at least till we hit major resistance. So 39.45, I'm not considering that to be too heavy, and I'm considering 38.50 to be really good support. I hope that keeps it simple and clean. Anything you want to add to that, Ben? Or
just in looking at bear market rally statistics, and it sure looks to me in my cursory review of the charts, since I got back last night, that we've started another bear market rally. 15% is kind of a number to look at on average for these types of rallies. It takes us up right almost to your full square. It looks like in the 4180, 4185 area.
Here, okay.
Yeah. So that's something I'm keeping an eye on. As we go level to level, if we can clear that 39.50, 4,000 area, that's kind of where I'm going to be looking next.
Okay, right up in there. Okay. Well, I would think if we are to trap a whole bunch of bulls, it would be right up in here. Try to do a false break above this would be ideal.
Exactly.
And that would line up perfectly. And also this apex that we want to watch. Probably, we're not quite there yet, but that's something we definitely want to keep an eye on, see how we engage when we get up there.
Yeah, that is a good spot to look at.
Which is also right around, it's getting up there. Yeah, that's all I have. Let's take a look at the weekly, see how the weekly is doing. Well, in the weekly, what's happening is we're rallying up into this trend line that we broke through, and also this other trend line that I had drawn in. So it's almost looks like, we can get up in here and sort of do that kiss from below, after we break a line.
And it coincides with your 4,000 level on the daily.
Which, interestingly, that lines with the 4,000. So it's possible, not that, we that's going to work out exactly, but just to know that that's also there. And so next week, we're basically looking for where the pullbacks would hold to see if this actually has some steam left in it. That's the key. So the key thing to watch next week is really more than the upside. Is really where would the pullbacks hold? Because we did have 5 days straight up. So we're going to do a counter trend. We want to make sure the counter trend holds in a decent spot and not get all weak and wobbly. So that's the main thing with the S&P. Moving on to the bonds. We've been watching this 216. We talked about this last week being resistance. And we had drawn this box out, months before that. You can see how, and we were looking for a rally off of 32, got the rally, went to resistance. So there's that. Expecting it to consolidate below the 216 square, which is around, let's say, below 138 for next week. and to see if we can hold 132 in any kind of a pullback. I just can't see it pulling back to 132 next week, but trying to see if we can, get through 138 or not. But to me, it feels like we're probably going to consolidate for the next few days, and then we can see how the consolidation holds, or the next pullback holds here, and then we can take maybe the long side. But I'm being a little bit careful in that. Longs were below at 138. Okay.
As you mentioned, Barry, if you follow our stuff and watch our videos, it's consistent that we're at a decision point here. Every time we get to the full square or the half square, price has to make a decision, right? Are we going to get stuck under it and the prevailing trend continues, or can we get above it, sit on top of it, and then, build higher?
Exactly. And this is one of those spots.
That's the spot. Yep.
Looking at the weekly bonds, we have the 1/3 of the square line where the bonds held. I think we mentioned it last week, looking for it to hold it at 138, at least to test that. And the next one up will be 141. So we're in that range here. There's a lot of overhead, as you can see, not looking for much other than to sort of consolidate the gains, or to see if we get wobbly and go and take up, go back and test the lows again. But I'm just looking for sort of a consolidating sideways week. See how that goes. But those are the levels to watch: 132 to the downside, 138 to the upside. Crude, on the other hand, well, we're still bullish, and it's had a big correction. Our key level to watch was this 90 up. That was our major sort of the balance point around 107, 108. And we got under, and we're trying to clear it, not quite cleared it. So on the shorter term, on the daily basis, the daily charts, we really want to see if we can sort of, let's say the 4-hour, for example, can get above 107.5 and hold above it or not. So if we can't really get above and get stuck under 107, 108, then I would say we got more consolidating to do before we move any higher or even, test anything. Now, that said, I want to, the key story here would be the weekly chart. And on that, coming off the 2020 lows, 90 degrees up, right around $96, $97. So, the sort of the template, the background level to watch on this would be 96, 97. Long as we're above that, we could just rally in a heartbeat. So I wouldn't be shorting this, is what I'm trying to say.
Agreed.
There will be a time, when everything lines up at a high, maybe we can try to get a corner, but this is not one of those times. And it looks like, and especially at this part of the cycle, and long as we're above 97, it's in a pretty strong position.
And Barry, if you're looking at the chart, you see it's just been a sideways correction.
Yeah, you mean in here?
Yeah, it looks like we've just been burning time before the next move. That's what it appears to be to me. I agree with you. It's very bullish.
Yeah, and the key level is 97. Long as we're above that, this part of the cycle, long as we're above that, and we didn't have anything really huge go off at the high. So my take is that we have more to go, and we just have to wait out this correction. Taking a look at gold, well, simplest way to put it is, as long as you're above the 72, let's say 1788, it's consolidating and it's bullish. We just have to hang in there and let this correction finish up. It looks fourth wave-ish, kind of messy. So you don't want to get in here if you want to do some short-term trading, but for the long run, I think anything above 1765, this is all a good area here. And knowing the longer cycles, anywhere in here is good, fair play. But I have a feeling, if it's going to do this, and considering the potential size of the next leg, there has to be some kind of a washout before we really do that, instead of just kind of crawling out of this. So we're kind of watching for that, and also sort of keeping an eye on this, because there's really nothing to trade at the moment other than to watch it daily to see if we get any clues.
Which is the case with most of the commodities now, which I'll talk about when you throw it back to me.
Exactly. We have to sit through that period, and the weekly is pretty much signaling the same thing. Let me zoom in a bit. So this 1881 over here was the lower boundary that we drew in. And the idea when we drew the box in, the idea was that we want to, if the market was going to continue to be bullish, we want to hold above this 1919 level, which we didn't. And as soon as we did that, it was a little bit of a yellow flag. Took out 1881. Then it became a little bit more of a yellow flag, more of an orange flag. And now, under that, we're basically consolidating, but in a very positive tone, right? We didn't go ABCing all the way down to 1500 yet. So it looks very bullish, but we're, if it's to trade, then it's not quite trending yet.
If time's a concern in your trading, it's not time.
That's very well put. Looking at the dollar, well, we did 90 degrees up, and that's definitely a marker. And if we're done with this, it's possible. I didn't see any big signatures to finish that off timing wise. So I have a feeling we're probably going to go up and poke up there again, and we're not quite done with it. But next week we'll have more time, and I'll try to do a little bit deeper dive into the dollar because we're getting close to something. So, and I think it's a good time to take a closer look at it. But for now, I think it's firm, and we have a very steep trend line here. As long as we're holding that, the dollar's in really good shape, and above 99 is in good shape. So we're at 104, and I have a feeling we might go up and retest that high. We're also setting up for a potential 3 drives to a high. So you want to watch that. Somehow we might get in there.
Which the setup could be that we get above that the 90 and then come back below it and fail, make a new high and fail.
Yeah. There's a lot to watch there. That's why I want to do a little bit more work on it and just spend a little bit more time on dollar next week. And here's the if we can get 3 drive, this would be just about perfect, right? We get into 135. Right at the half square, and that would meet a lot of criteria, and that's around 106, 107. So before this potential for 3 drives showed up, there are other targets, obviously, 115, 112. But as long as this is playing out, we'll have to wait to see how the next one plays out. That would be around 106, 107 will be the next spike up.
It looks like it also completes a measured move that you put in there, huh?
Exactly. So a lot of things will come into play. I think it's like some of the commodities, the waiting game for now. Euro looking a lot like the bond chart. We dropped through the square. It was 216 in the bonds, it's 180 on the euro. We got down here, but it seems like it's very clear 180 is holding, and we're just spent the entire couple of weeks sitting under it, not being able to get above. And I would say it's neither strong or weak. I have a feeling, we could go up and tap this 101 area, the 1.5, the half square of this current square, the half 50% of the square. In the meantime, it's probably looks like it's going to consolidate in here. And 106 is a level of 180 degrees down. So it looks like it's probably going to consolidate and maybe even try to get above a little bit and go back and test it. Testing 101 would be ideal for me. I think that would, give us a good low. Right now, we really don't have any good numbers showing up.
If we get down to 101, they're going to have to go for parity, aren't they?
That could be. Yes. And 216 is still down below. So there's nothing at the current lows. I have a feeling it's going to go. And if the dollar does that 3 drives to a high, we would probably go down and check around 101 or even parity. That would give us the weakness in the euro that we're looking for. Makes sense, right?
Absolutely.
That works that way. And weekly euro, pretty much the same case. If we're looking, we came to the 1/3 of the square, but we kind of spiked under, kind of sloppy. So this 102 and 101, 102 area looks a little bit better weekly basis. So, we don't quite have a lower low here. And, these double bottoms usually get taken out. So I would expect another low at some point, especially if the dollar finishes up with a nice 3 drives to a high on the weekly. So for now, not much. It's just weak, and you can maybe trade the short term. Even that is a really crappy market. So just focus on the stuff that's moving.
No question.
And that's all I got. Let me throw it back to you and talk about the NASDAQ and the other things.
Mm-hmm. Interesting spot they closed it on Friday, huh?
Yeah. Yep.
You got to love it when that happens. So, as you know, since the highs on the NQs, we've been bearish and saying, watch the levels and see if it can hold or see if it, can get above. And it just hasn't been able to. I mean, even off the last low, look where we failed. Right. Yeah. And so, but the key thing here is we now have a turn. We close right at the half square, right on the trend line. And that's in the, call it 12,160 area. So, it's a pretty pivotal spot. If we can get above this half square, it opens up, much higher prices here, like call it 12,800. And then if we can get above that, which again, character wise, it's failed multiple times at these levels when it comes back on them. So do we get that big push, that big bear market rally into some sort of resistance that we can sell again? That's what I'll be looking for. The speed with which we came out of this hole was really, sort of bear market rally characteristic. So
squeezy feeling.
Yep. So let's see how far they're going to push it. We know the levels where to look, for failure, where we can have a good risk reward. But right now it does, based on the evidence Barrie showed in the ES, and, as long as it holds here in this pullback on the NQs, which you call it 11,500, if we get a little pullback into that, that should hold if the bear market rally is going to have some legs and last a little bit longer. So that's kind of what I'm watching. It's just, I thought it was absolutely brilliant where it stopped and where the resistance is. So look, we have a marker here and we have a marker here to watch. And that's, price will tell us how robust this rally is going to be based on how it handles either or both of those levels. Anything else to add here on the NQs?
Well, I think getting above that half square would actually be the thing to watch next week. Mm-hmm. And that'll probably be a little bit of a clue towards the S&P also.
Right. So, how strong are the animal spirits? Like how much risk do people want to take, and how willing are they to jump in? And we'll see. We'll see how it acts at either, the half square up here, again, and that's in the, call it 12,150 area versus the full square down here at 11.5, 11.6. So those are the levels. We'll watch it and we'll see. Now we want to move on to the commodities, and Barrie and I were talking before the show, and I said, the corrections in the commodities that we've been talking about for a while now really picked up steam last week. And I guess reading a few things, it looks like the fears of recession have, had people dumping commodities and buying stocks that are more defensive or not dependent on the economy to grow, which, would be things like NASDAQ. What it's telling me is the bigger picture in commodities. As you know, we do a monthly show every month. We'll do the next one in the next week or so as we hit the end of the month this week and print those monthly bars. Bigger picture is still very bullish on the commodities. So it's important to, if you haven't watched it or you don't watch the monthly show, make sure you watch it, because that's sort of our overall strategy setter, right? We want to be in things that have a bigger picture strength behind them, or we want to be short things that have bigger picture weakness behind them. In the commodity space, and I'm going to give you an example of a few, one in each group sort of, you'll see on a daily basis where they're pulling back into support. And then when we do the monthly show, you'll see even more significant levels that they're pulling back to, which if price can stabilize there and hold, it sets the base. And then we look at the shorter time frames for timing to get in these things, to get exposure for the next move. Let's jump on the first one. The first one we'll do wheat in the grains. So here's wheat. You can see we had that spike high on the Russian invasion. These little dots are the limit up days that we saw. There was like 3 or 4 limit up days straight, and a couple days it traded only at the limit. So it was really bullish, really, fast price action to the upside. And since we've had a sharp pullback, we've had a rally with a lower high, and now it looks like we're heading into to try and complete an ABC here, which is, call it 890, 895 area. And the key thing to look at is you're getting your price is pulling back to this sort of pre-invasion level and getting rid of this speculative move. When we look at the monthlies, as I said, next week, you'll see it's also pulling back into a very important area. So as long as price holds, above this half square, call it 850 area, I mean, this is still very, very bullish, because that would be, a pullback, an ABC pullback in a bull market, pulling back to previous areas of highs. So this is an example. There's nothing to do bullishly in wheat right now. We have to wait for this correction to finish up. Curious to see how it does here at the full square. And if it loses that, then the next level of interest is the half square. But bigger picture remains very bullish on the grains. And I think, wheat is a good example of what's happening. Anything else to add on wheat, Barrie?
No, we're good. I think you did a good coverage.
Okay, let's take a look at one of the softs that I think looks interesting. That's coffee. Coffee's had a little less of a sharp pullback as wheat, for example, but you can see we've essentially been going sideways for 6-7 months now. We had a high here in December, made a higher high in February, couldn't hold it, and now we're back in this range. But the key thing to look at, again, and this is just on a daily basis, look where this price action is all taking place. It's on top of these previous highs that we made, in late 2021. So to me, that's a bullish thing. It's pulling back, price is holding. Yeah, you're getting frustrated if you bought options in here and you're not getting the price movement you want and you're burning theta, but this is bullish long-term price action. It's basing for the next move. Are we going to have to see sort of a clean out move, maybe to take out this low before they go? It's a signature of what commodities do, so we can't say it's not possible. We're just going to watch the lower time frames, maybe the 4-hour here, look for a good setup there, and then be ready for the next move up in coffee. Anything else to add here, Barrie, on coffee?
No, we're good.
Okay, let's go check out one of the metals. That's gold. Barrie talked about gold, but again, I want to show this view on a daily basis. We've been correcting. We did an ABC here into a little spike low into the full square, held it. Now we're chopping around in here. But again, look at where the price actions come from. Other than this deviation up here and this little spike down here, we've basically been in this, half square from here to half square here for over a year now. This looks to me like it's basing for the next move. When we look at the monthlies, you'll see that this entire price action you're seeing and the entire consolidation in gold is on top of the previous all-time highs, which is a bullish formation. It's frustrating now. I know, we thought we had it going here and we were ready to take off, and now we pulled back again. And now, for the last 2 months, month and a half, it's just been chop. But watch your levels. Barrie laid out really, really good levels. Here it's, it's on a half square on the top is, call it 1880. And on the downside, the full square here is 1786, 1787. But gold looks good as well. And silver and copper are sort of in the same boat. So that's why we're showing the metals. And then the last one in the energy group is crude oil. I'm not an Elliottician, neither is Barrie, but we just look at the wave structure and, price action to say what's going on and, where are we in the move. This looks like classic wave 4 stuff, doesn't it?
Yep. Actually, the entire your segment should be part of a wave 4.
How to identify wave 4s and stay out of them.
Exactly. Fourth wave seminar.
Right. So that's what this looks like. Big triangle, big moves, but going nowhere. Barrie gave you some great levels on crude. On my daily, it's the 104 area, and looks like we're holding it for now. But this, on a longer term basis, still looks bullish. I think if this is wave 4, that means there's a 5 to come. Even if it's a false break 5, still takes us up, over 130. And if it's a 5 that has moves and, based on the monthly, and the bigger picture, there is, very good bullish energy there. The next leg up could take us to, some of the crazy numbers that you're seeing out there, 150, 200, definitely possible. But crude's bullish. Again, the consolidation is above previous highs from last year. And when you look at it on the monthly, it's sitting on top of really good support. So the bottom line is, in commodity land, it's wave 4, it's correction time, but we are much further along. And the price action that I saw last week, now that I've gotten back from being on vacation, it kind of has that clean out feel before they're ready for the big move. Hopefully, like Barrie said, we see some false breaks, we see them taking out lows and then reversing. And if you go back and you look at your commodity charts or you look at your Forex charts, it's a signature of how the big moves start. They start with a false break in the opposite direction. So it is something we're keeping an eye out on in the individual markets, where longer term there are very, very bullish setups. So not a lot for me to add this week, but certainly a lot going on in the markets, and I think we're entering a crucial period for the commodities where we need to be ready to catch the next legs, which could be starting, now, could be starting end of summer, could be starting in the fall. Somewhere in this time frame, we're going to get the next move. So the key is to be ready, know your levels, and then act with confidence when it happens. Anything else you're focusing on this week, Barrie?
Well, most of the S&P and bonds and crude, of course. Mm-hmm. Those are the main 3 for now.
And with the S&P, you want to see what the character of this next pullback is to tell you, how robust this bear market rally is going to be.
Yeah, because we're pretty much open into 4,000, got about 100 points to the upside. So we really want to see where the pullbacks come in.
Excellent. Well, have a great week, everybody. It's good to be back, Barrie. It's good to have the banter with you, and let's have a good week.
All right. Have a good week, everybody. Thanks, Ben.
All right. Bye.